Saturday, and I just want to go through some charts. And before I do that, though, I'll talk a little bit about Friday and really an interesting day. It's the fourth largest spike ever in volatility for a 1 day move, and there was only 6 other days where the breadth, how many stocks up versus down, was more severe, and so it obviously was an outlier day. And the interesting thing about it is that there were some clues. I obviously didn't pick up on it. I was playing a contract role, oil down, market down, buy the dip when it was 3 standard deviations from the pivot, and it just grinded all day long. And so every area that you usually get a buy didn't happen, and so it was a tough day for me on the trading side. And so what I took from that is that there is now, I guess, correlation trades where bonds down, market down forces even more selling and forces volatility even higher. And so now that everything and everybody is on the same trade, I guess we're going to see these extreme moves again. And I just don't know if it's a normal correction, if it's going to be like a tantrum like we had in 2011, or if it's going to be a liquidation event like we had in 7, 8 going into '09. And I just don't know. But I'm just going to kind of wait and see what happens with Yellen next week. But I think at any rate, we're going to go into a higher volatility environment. I don't think it's going to be as benign as it was. Politically, I think Obama intimidated people, because people were afraid to criticize him. And I don't think Clinton has the same cachet if she gets in. And Trump, they simply hate. So it's going to be really interesting to see what happens. When you look at why the market did what it did, I think contract role probably played a part in it. This correlation probably played a part in it. People are talking about raising the interest rates, but I don't know, because gold and natural gas and the miners, and ags, they didn't really fall very much at all. And they typically are higher beta, and they kind of ignored it. So I don't know if that's the new rotation, which I'm very interested in, because I'm already jumping up and down on 2 of the 3, and the third one I've been talking about, and I'm going to have to just get off my horse and get in it. And or if there's something more, involved here, but I just don't see them being able to raise rates. If they raise rates, the dollar starts moving up, it's going to cause disruptions throughout the world. China will not be happy, and I think it's going to cause some great issues. So anyway, having said all that, I'm just not going to be a hero next week. I'm just going to watch and wait. And if you look at SPY here on the charts, is that, this is probably a likely move, and this is probably, a possibility. But if you go out even further, and I'm literally looking the week ahead here, next 2 weeks. But if you look at this on like a daily chart, I see no reason why, if they raise interest rates, we don't get down here. Last time we had these moves, the market went off 6% before Yellen said, "I'm just kidding." And then when she actually did it, we dropped, over 20% from highs, but now 16% move down. And so why wouldn't we move from 213 into the 180s? For a reset of risk and between bond and stock. So I think that's the risk they take. I'm not too sure. It'd be interesting to see if they have the cojones to raise the rates to cause such an incredible market disruption into the election. I mean, they simply would be giving Trump all the fuel he needs to tell the American people how screwed up Washington is. I just can't see them doing it. They rather, in my view, if it was me and I was of that ilk, I would say I'm not going to give the guy any ammunition. But when the election's over and our person's in, then I can give her room by selling the market off before she gets into office. So anyway, that's my view. But if they raise rates, I think this is in play. So now, looking at what worked, and we had a good trade on GLD took it off earlier in the week, and now looking at this, I'm going to go to a weekly chart because I think it shows it much more beautifully. Is that, this is a big time cup and handle, and let me spread this out a little bit for you here. And I think this move here from 100 to 130 is going to go from 130 to 160. Probably this will probably be a good area 156. And dare to dream go back to old highs, but I don't think so. I think this will probably be the next move, regardless of what happens. I think people are going to hold on to things that have value, and I think as we get disruptions in the stock market, they're going to come out of those financial assets into hard assets, regardless of what the dollar does. And if you look at Chesapeake Energy, which is a natural gas stock, it's that you can cause some sort of crazy inverted head and shoulder pattern, but it's definitely coming back up. And for me, looking at the weather forecast, whether you're a global warming person or a global cooling person, pretty much everybody's saying the winters here are going to be brutally cold, and it's gonna suck on the natural gas. So, I'm looking at this to blow right through, probably retrace the whole move off of the 215, and I see a double here at CHK. So my recommendation for people is to take a position in it now, and if it goes down on you, 10%, add to it. But I wouldn't be jumping out of this. I think the lows are in for natural gas, and I think it's gonna run. And so, my long-term portfolio, this was the piece I've been waiting for, and I've been waiting, and now I'm gonna bite the bullet and jump in. And so, CHK is kind of my favorite, but also Encana and Comstock are two that you can trade as well. And this is the one that I will push out when I see the next buy signal here on the hourly chart. And so if you look at that, this looks like a bull flag breaking up again. And so, it's just the momentum's just been impossibly strong. So if you're nervous, you want to wait to see if this thing sells down. But if it breaks out to new highs, you need to buy the breakout, okay, which would have been here. So you don't have much room. If it gets up to over 780, you need to bite the bullet. If you want to wait until then and see if it comes down and meets this VWAP line, which is moving up nicely. So the next couple days, it'll be in the low sevens. You can do that too, or you can buy half now and see if you get a breakdown. But if not, buy the breakout, because this is going to keep going up higher. A quick look at oil. I think oil is probably seasonally done. And so this move here, this spastic move higher, is one that I didn't chase, and I thought I was an idiot and I missed the move. But I think this was another manipulation. They took a drawdown report, which really the reason why it got drawn down was because they were worried about the hurricane on the East Coast, and so everybody topped off their tanks, at the point of purchase, and so it drew down one of the refinery areas, the storage areas, and so they used that to jump on the algos to jump on this move. But look like it's selling off now, and I just wouldn't be a buyer of oil right now. So, even if they don't raise rates, you might get a knee jerk, but to me this looks like a series of lower highs to me, and if it breaks below here, and I'm using oil as oil here, so I just think oil is going to go back down. The last 3 years, it's just in the fall winter it's been weak, and I see no reason why it's going to be any different this year. If we look at silver wheaten, silver wheaten's just fine. Give you a perspective on a weekly here, is that it broke out Okay, so I've been in silver wheat from the low 20s, and I've been adding on dips. I'm fully positioned now, and this move here, I think this hammer is a bottom, and I'm waiting for it just to break out and keep going. It's going to obviously follow or lead gold, but silver wheat looks good to me, and so I have no intention of selling it. If occasionally I'll sell calls against it, but I think silver wheat is gonna run. The metals and miners have been so suppressed, and I think the money has to rotate out of somewhere, and it's going to rotate out of the stock market, and I think it's going to rotate into commodities. And speaking of which, my other stool is the grains, and I think we had a bottom put in at the end of August, and at the any rate, if you just want to trade this, if you don't believe me in terms of the boy who cried global cooling wolf, is that you're going to get a spastic move here. And so at the very least, you're going to get probably a 10% move in the grains. And for me, I think it's going to go, and then it's going to just keep going. I'm looking for a move into the 50s and 60s, just like what happened after the last El Nino event into La Nina. And I see no reason why that's not gonna repeat. And so if you look on this on an hourly basis, is that it's already had a pretty good move off the August lows. This is embedded. So, if you're not sure what you want to do here, and the moving average is ready to turn up, is that I would just slowly buy in, but I think these days are over. This is the lowest grain prices ever, inflation adjusted, ever. And so, farmers in a lot of countries lost money this year. In America, other than price supports, farmland collapsed. People are shifting what crops they're going to plant next year, and this stuff doesn't go to zero. So it's not a trade you're going to wake up and JJG is going to be at 10. So this is it's a good stock to own. It's a good one to stick in your portfolio long term, and it's going to pay. My view is we're going to double from here. So that's what I'm looking for next year for my big portfolio. I'm looking for a double in silver wheat, and I'm looking for a double in the grains, and I'm looking for a double in Chesapeake. And so I'm going to try not to screw around with these too much, get my positions in and let them go, and occasionally sell some calls against them to generate some liquidity for myself. And so that's kind of what I want to talk about this week. And last week's over. Now we move forward, and just to put a note to yourself here when trading is that market down, oil down. If you're day trading, just kind of wait until the oil markets close, or at least at 12:30. But if market down, oil down, bonds down, then I think it's probably safe to stay away, or to sell the rips. And so key learning for me. And so I'm going to keep an eye on it now, because that correlation trade really came up and hit us in the head. Have a great day, and I'll catch you guys all later. Bye-bye.